I actually didn't have the microphone turned on yet. I was being informal. All right, before we actually get started with the hearing, I just wanted to make a few explanations about the logistics. First, I wanted to remind everyone to please turn off your cell phones so that any noise will not disturb us if you haven't done that already. When you're speaking today, please remember to speak up loudly and clearly into the microphone like I am doing right now. The way it works is that you push the button once and the green light turns on. That shows that your microphone is on. And then when you're done speaking, if you can turn off your microphone so that it doesn't pick up any background noise like shuffling papers or typing on a keyboard. And you don't need to hold down the button while you are speaking. Also, I'll remind everyone that we're not actually, I believe, live streaming today because of a technical issue, but this hearing will be uploaded to YouTube later. And so, therefore, please don't share any confidential information during the hearing, such as home addresses or social security numbers or anything like that. All right, if everyone is ready, we can get started. Good afternoon. This is the appeal of Addison Pools, Inc., and we are on the record. This is OTA case number 20096720. I am Suzanne Brown, and I am the lead administrative law judge conducting the hearing for this case. This hearing is before the Office of Tax Appeals, or OTA. I will remind everyone that OTA is not a court, but is an independent appeals body. OTA is staffed by tax experts and is independent from the state's tax agencies. Because OTA is a separate agency from the California Department of Tax and Fee Administration, arguments and evidence that were previously presented to CDTFA are not necessarily part of the record before OTA. OTA's written opinion for this appeal will be based upon the briefs the parties have submitted to OTA, the exhibits that will be admitted into evidence, and the arguments presented at hearing today. As a reminder, this panel does not engage in ex parte communications with either party. My co-panelists today are Judge Andrew Wong and Judge Michael Geary. Although I am the lead ALJ for purposes of conducting the hearing, all three ALJs are co-equal decision makers in this process and are free to ask questions at any time. Also present is our stenographer, Ms. Sanchez, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also speak clearly and loudly into the microphones. When needed, the stenographer may stop the hearing process and ask for clarification. After the hearing, the stenographer will produce an official hearing transcript, which will be available on the Offices of Tax Appeals website. And I believe I said we are on the record with the appeal of Addison Pools, Inc., OTA case number 2009-6720. Today is Wednesday, February 15th, 2023, and it is approximately 3:13 p.m. We are holding this hearing in Cerritos, California. As I said, I'm Suzanne Brown. I'm the lead ALJ for this case. My co-panelists today are Judge Andrew Wong and Judge Michael Geary. I will start by asking each of the participants to please state their names for the record, and I will start with the representatives for CDTFA.
Nalan Samaravikrama for the department. Oh, Nalan Samaravikrama for the department.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Christopher Brooks, Tax Counsel for CDTFA.
Thank you. And the representative for appellant.
Barry Moser.
Okay. Thank you. Next, what I'm going to do is first I'm going to confirm what the issues are for hearing today, and then I'm going to talk about admitting the exhibits for hearing today. We had a pre-hearing conference in this matter on January 17th of 2023, and I issued a pre-hearing conference minutes and orders afterwards that summarized everything that we talked about during the pre-hearing conference. As we discussed at the pre-hearing conference, and I confirmed in the minutes and orders, there are 2 issues for hearing. The first issue is whether additional adjustments are warranted to the unreported taxable measure based on the cost accountability test. And the second issue is whether relief of interest is warranted. First, I want to talk about the second issue, the relief of interest, because the question I had at the pre-hearing conference, as I recall, is whether appellant is seeking relief of interest for any time periods beyond what CDTFA has already conceded as relief of interest. Mr. Moser, do you recall we discussed this during the pre-hearing conference?
Yes.
Okay. And you saw the periods, I believe it totals 15 months that CDTFA is conceding relief of interest. So the question is appellant seeking any additional relief beyond the periods that are conceded?
Yes. Yes.
I think that I'm hearing that you need to be closer to the microphone. Is your green light on?
Yes.
Okay, then if you can just move the mic closer to you, move you closer to the mic.
Okay. Is that better? Is that better?
I think so, yes.
Okay.
Yes. All right, what periods are you seeking relief of interest for beyond what CDTFA has already conceded?
I think the periods from March 2019 to February 2023.
All right. Hold on a second. Now, CDTFA has conceded for the periods December 2013, May and June. Well, I'm going to list them all. They've conceded for some periods that include June to August through August 2019 and October 2019 to January 31st, 2020 that are covered by what the period you just identified. They also conceded periods prior to what you just identified, so I won't get into those. But I guess the question is, if you are conceded, the CDTFA issued its decision, and then you filed this appeal with OTA in September of 2020. So any relief of interest beyond after CDTFA issued their appeal is I believe not something that my office can address.
Yeah, I had a hard time understanding exactly which periods they were conceding. And so my understanding on the reason that I'm asking for this is that this audit has gone on for 10 years, and there were long stretches of time where we had no communications from auditors or appeals or wherever. And so during those times, that's what I was trying to figure as to the interest should stop during those times. So, because I think, when did we? What did I have here?
All right. Well, my first question was what time periods you're conceding. I will note that part of the time period, what time periods you are alleging relief of interest is warranted beyond what is conceded. I will note that part of the period that you just identified is already conceded, June through August 2019 and October 2019 through January 2020 is already conceded. So you're saying, in addition, March 2019 through May 2019, and then all periods after January 31st, 2020. And then my next question is related to this: why don't we have your request for relief of interest that we discussed at the pre-hearing conference? If you recall, you agreed, and I put in the order that you were going to submit it by January 31st.
Oh, I misunderstood then. I didn't realize I had to put in a request.
Did you receive the minutes and orders, the document that we sent on January 23rd, I believe, that confirmed what we talked about?
Yeah, I did get it. Yeah.
Okay.
I just misunderstood. I thought it was all coming up during this hearing, that's why.
Okay, well, we can't grant any relief of interest if we don't have the signed request for relief of interest. Now, when we talked about it at the pre-hearing conference, I thought I'm certain that I had asked you to submit it by January 31st. How much time do you think you would need to submit the request for relief of interest? Like a week, 2 weeks?
Mean from now?
From now.
Oh, yeah, what is, today's Wednesday? Yeah, if we can do a week, till next Wednesday.
Okay.
And I just send that to that evidence?
The same email address that you were submitting everything else, with a copy to CDTFA. All right. CDTFA, do you have any response to what we were just discussing about the issue 2 about relief of interest?
I didn't understand your question. Yeah.
I was talking too fast. I said, do you have any response or question or objection to anything that we just discussed about submitting the request for relief of interest?
No objections.
Okay. I don't know if you're going to want to respond to the written request for relief, but I need to at least get it in writing because we can't grant anything, even the conceded portions.
Right, yeah.
Yeah, okay. All right.
Do I have to say anything about the conceded portions, or just on the new portions?
CDTFA, do you have any thoughts on that?
Based on our review, we recommended 15 months, but we don't have the request signed by the appellant. So, in order to become effective,
Right.
then
Well,
we need a request.
No, I understand. You need it in writing, under
Yeah.
in writing under penalty of
and
perjury.
yeah.
I understand that.
Also, Judge
Yeah.
Brown, I'd just like to add, we've already conceded those months, so I don't see the purpose in addressing those in his presentation, since we've already given those away,
Right,
assuming he files the form.
That is what I was asking. I just wanted to let you respond. So I'll say appellant does not need to address the conceded portions, but I also want to clarify that I'm not aware of any authority that allows relief of interest for periods after the CDTFA has issued its decision and appellant filed the appeal with the Office of Tax Appeals. So you would want to focus your argument regarding any non-conceded portions on the period of time when CDTFA actually still was, when the case was with CDTFA, as opposed to when it had left CDTFA's possession and you filed your appeal with OTA. All right. Next, I believe, as I said, we already clarified what issue 1 is, and then we clarified issue 2. If no one has anything further on clarifying the issues, CDTFA? we're good?
No, we don't have.
Okay. then I will just confirm that appellant will submit the request for relief of interest in writing under penalty of perjury. Mr. Moser, if you would refer back to the pre-hearing conference minutes and orders that I issued a couple weeks ago, I believe it was January 23rd, and it contains a website address for where you can find a form that's on CDTFA's website. It's Form 735A. You don't have to use that form for your request for relief of interest, but it's convenient to use it because it already contains the language that you need regarding penalty of perjury. So it's available as a resource to you. All right, then if we've confirmed the two issues for hearing, then next I want to move on to admitting the exhibits. All right, as I reminded the parties during the pre-hearing conference, and as I indicated, I'll confirm during the pre-hearing conference minutes and orders, OTA's regulations require submission of exhibits at least 15 days prior to the hearing, which in this case was January 31st. I'm going to talk about appellant's exhibits first, and then next I will address CDTFA's exhibits. Appellant timely submitted Exhibit 1, which is pages of Excel spreadsheets. First, I'm going to say at the time of the hearing, of the pre-hearing conference, I asked CDTFA if it had any objection to admission of Exhibit 1. CDTFA indicated that it hadn't had time to review that document yet because we had just received it right before the pre-hearing conference on January 17th. I asked if CDTFA would identify any objection if it had one by February 8th. I didn't receive any notification of an objection, so from that I infer CDTFA doesn't object to Exhibit 1, all those Excel spreadsheets being admitted. Is that correct?
That's correct.
Okay. Then I will say appellant's Exhibit 1 is admitted. Next, I want to move on to the documents we received more recently. After the close of business on February 13th, appellant submitted an additional spreadsheet and 13 pages of invoices that OTA received because of the way our system works. We didn't receive them until the morning of February 14th, which was yesterday. And I will say first, I'll call these proposed Exhibit 2. I'm just going to label all of them together as proposed Exhibit 2. I have two questions for appellant. And then I will ask CDTFA to respond. The first question is, why weren't these timely submitted, given that we discussed at the pre-hearing conference, January 31st is the deadline. That's not the first time that my office notified appellant of that evidence needs to be submitted well in advance of the hearing. This case was first filed in September of 2020 when my office acknowledged the receipt of the appeal. Our form letter says that the parties need to submit their evidence in advance. When we notified the parties of the hearing, and that notice went out in December of 2022, it states evidence needs to be submitted well in advance. So, Mr. Moser, why did we just get these yesterday?
This new exhibit is really just a rearranging of the prior exhibit, and the client tried to put it in a little easier format to read, and then they attached also copies of the invoices that related to the exhibit. They were having problems going back and finding these invoices, and because of the long delay on this, and so that's what I tried to have them go back and get the invoices, because that's really my whole contention on this whole audit was no one looked at the invoices, and well, they did look at them, but there was a problem with it. So that's what I was trying to do, was just trying to make it easier. It's really, there's no new information on this exhibit than was on the other one. It's just a reformatting of it and trying to put it better so that someone can look at the the invoice, and you can also see that either the tax was paid on the invoice or it wasn't paid. That's
So are you saying that the spreadsheet portion is the same as all that information is contained in the spreadsheets you submitted in Exhibit 1?
yes.
Is it the part that's labeled miscategorized on Exhibit 1?
No, it should be the main spreadsheet.
On Sheet 1?
The original spreadsheet was many pages, and this is just it's really what this is doing is reformatting that into an easier way of reading it.
All right, but then the invoices themselves,
Relate to the listing that's there.
all right, but
And those invoices would relate to the original spreadsheet also, because they're the same items.
has appellant previously submitted those invoices as evidence? Did CDTFA ever get them?
Well, I sent them to everybody, yeah.
But you sent them 2 days before the hearing, really 1 day, effectively.
Okay.
So my question is, why weren't they submitted sooner before the deadline? Or
Because
by
they were
the
trying to find these invoices. That was the thing. They were trying to match up the invoices to the listings.
Right, but this hearing was filed in September of 2020, so why weren't they submitted earlier?
I'm not following that.
I'm just saying, your client had 2.5 years to put this evidence together, and I indicated when we had the pre-hearing conference that we needed them in time by this deadline, because this is, our regulations say 15 days before the hearing.
No, I understand what you're saying, and the problem is just the long delay on this whole thing is that you can't just keep these files readily available all the time when they're so old. I mean, people have businesses; they have limited space, so they put things in boxes, and they label them, and so they had to go back and find these invoices again and match them up to the invoices. We had shown this during the audits and stuff, and this whole thing is very frustrating on my part for the way the audit was conducted, and this may not be the right time to go through it, but I'll go through that.
Well, let's just focus on the exhibits
but that
right
was
now.
the reason that it was late. It was just the client was trying to find all these invoices again.
All right. And CDTFA, I am going to get to you next, so I appreciate your patience. The second question, before I do that, though, the second question I was going to ask appellant is, I was going to ask for an offer of proof. In a brief summary, can you say what is it that you contend these new documents that you just submitted what will they establish if they are admitted into evidence?
Well, they show that either the tax was paid on these invoices, or if the tax wasn't paid, that it wasn't required to be paid. And I would say there are a few errors in here, but that's really what it's supposed to show. It's a listing of invoices where there was tax due and invoices there was no tax due, and we're showing the actual invoice so someone can see that there was no tax due on it because it was labor or whatever, and there was tax due because it was equipment or something that required tax.
All right. Now I'm going to turn to CDTFA, and first I will ask, does CDTFA have any objection to the admission of what I've labeled as Appellant's Exhibit 2, the documents that were submitted at the end of the day on Monday, February 13th, that we all received the morning of February 14th yesterday?
Yes, we do, based on timeliness.
And then we also received one additional invoice just this morning from appellant, and I think that that's probably, all of my questions about the earlier documents are probably, I think that everything is pretty much the same in terms of the invoice we received today. I was going to ask the same questions, but I'm anticipating that I would get the same response as to why they were late and why it was late and what the invoice would prove.
Yeah, it's just related to their documents. They had a listing of X-Tax invoices, and this shows why it's wrong on their schedule.
I'm going to uphold the objection based on timeliness. I think that the documents came in too late for CDTFA to be able to have a meaningful response. I will say, appellant, you can refer to the documents if they are part of your argument, but I'm not going to admit them as exhibits because it is contrary to our rules of our regulations with the 15-day deadline. I did admit appellant's Exhibit 1, and now I'm going to move on to CDTFA's Exhibits A through K. At the pre-hearing conference, appellant said it had no objections to admission of those exhibits. And CDTFA, you have no additional documents other than Exhibits A through K, correct?
Yeah, that's correct.
Okay. Appellant, assuming that you have no objection to admission of those documents, right, that we discussed at the pre-hearing conference, I will say CDTFA's Exhibits A through K are admitted. Next, I will just confirm neither party is calling any witnesses, and I will just go over again, as it indicates in my pre-hearing conference minutes and orders, what the order of events will be. We'll have appellant's presentation first, and appellant will have up to 30 minutes. Mr. Moser, you do not have to use all of that time. That's a maximum. I am cognizant that it is late in the afternoon, so I'm going to try and streamline things. Next, we will have CDTFA's presentation, and in the interest of time, I may just condense the judge's questions all into one block after both parties have made their initial presentations. We'll see. After we have questions from the judges, then we have time for appellant's rebuttal, and appellant has up to 15 minutes. And then CDTFA, we discussed at the pre-hearing conference, if you wish to make a brief rebuttal, you can, but we'll see at the time. If you don't, that's fine as well. I've admitted the exhibits. We've gone over the schedule for this afternoon. Does anyone have anything else to raise before we begin with the presentations? Does anyone have any questions about any logistical things at the hearing today?
No.
No.
Okay, then we can proceed with appellant's presentation. Mr. Moser, whenever you're ready, you have 30 minutes.
Okay. Well, the first thing I just wanted to talk about was the removal of the interest. So that I'm just going to do with the by written request, and then that'll take care of that, right? We don't need to discuss any more on that. So the main issue that I have with this audit, and the reason that I've taken it this far, is this audit was conducted in my office, and when the audit happened, we brought in every invoice, every purchase invoice that the client had. We had 6 or 8 boxes of these invoices, and the auditor sat there in my office for 2 to 3 weeks going through these invoices. During that time, never once did the auditor ever ask a question. At the end of the time that she was there, did whatever she had to do, she said she's not coming back anymore, she's done, and as far as she was concerned, the audit was, from her point, was complete. So that was, the audit, I guess, started sometime in March. That was probably sometime in May, June that it happened. And she said she would issue a report or whatever. Never asked a question, never commented that she had any questions about anything, that she found any errors or whatever. Sometime in August, I contacted her because we don't have a big office and we had all these boxes. And I contacted her and said, do I need to hold on to these invoices anymore? Do you have any questions about them? Or can I give them back to the client? And she said, no, you can give them back. We don't need them anymore. Maybe about a month or two later, sometime September, October, I received her findings. And it astonished me that she had all these findings on all these invoices that she was looking at, never once asked a question. All of this could have been resolved had she just said to us, hey, I have an invoice here. I don't see tax paid. Why wasn't it paid? We could have gone over it and we could have resolved every one of that. We never would have gotten this far. We could have resolved it right there because we had the invoice there, but never did that. And this is what frustrated me, in that never once has the auditor or her supervisor or any appeals person ever came back and said, hey, look at these invoices that we looked at. These didn't have tax and they should have had tax. Never once did that happen, and that's what we tried to do with this exhibit, was go back and figure out, should these invoices have tax or not? The client was running, unfortunately, was running 3 businesses at the same time through the same corporation. He was doing construction, he was doing, he was servicing pools, doing going out and servicing the pools. And he was, and he had a little store in his office, where his office was. He had a building, and he had a little retail store that he would sell some products to for pools. And so, the way the client had everything set up on his purchases was with his vendors. He would have different accounts. One account was retail account, one account was wholesale account. So he would, purchase and tell the vendor what he was purchasing for, and then they would invoice, they would charge him tax or didn't charge him tax, whichever way it was supposed to go. And I'm not saying that everything was perfect, but we could have resolved all this. We had every invoice there. And then later on, they came back with this, what's that called, that test that they do? Okay. To me, it's so abstract, because if you have a big company where you have, a controller who's really an accountant, who really understands bookkeeping, and you can come up with a pretty good set of books where your cost of goods sold is pretty good, and everything, is in, let's say, in proper place. For our purposes, this is a client that, barely had a bookkeeper. Did have a bookkeeper who kept books through QuickBooks, but, she's not really trained other than she knows how to use QuickBooks. And so, for our purposes all these years, when we're just doing a tax return for them. We're not auditing their books. We're not doing any financial statements. We're doing a tax return. The IRS doesn't care if you put something into cost of goods sold or you put it into operating expense. If it's a deduction, it's a deduction. They're never going to make a different determination to say that, you put your operating expenses in cost of goods sold or you put your cost of goods sold in operating expense. And that's what this test is kind of doing, is that it's misleading by the fact that maybe the books aren't perfect. I mean, we had some other differences with the different auditors that through appeal, we got reversed. But one of the main things that came up with this when I was looking at this is that on this test, it never took out the service route invoices. So the test is showing them as if they all should have been taxable, and it's not true. So, I mean, that was why I gave this last invoice, because that's what this invoice relates to. It relates to the service route, and that that it was a non-taxable event. So, I'm going through and I'm looking at this test, and I'm just saying, this is somebody's abstract way of trying to figure out what the taxable purchases should be. But we went back and looked at the actual stuff and came up with a vastly different number. I can't believe that that anybody can say that we can do a test that's not based on facts or purely facts. It's based on something that we perceive as being factual, as opposed to looking at the actual invoices, because that's really the determination of whether something is taxable or not. You look at the invoice and you say, they purchased materials or something that they're not going to resell, that they're using for themselves, and they should have paid tax on it. Or it's something that, some of this stuff was for services, so there's no tax on it. So that was the way they did the audit originally, but then they kind of switched when we asked them about this listing of invoices and how they came up with it. So I don't know. I look at this test and I found so many errors in it that I just can't trust it. And that's what they're basing their whole argument on, of what the taxes is due or not due. And so that's why we went back and we looked at every invoice. I asked the client to go back and, I gave him the listing of the invoices that the auditor came up with. I asked them to try and find them. Some of them they couldn't even find. I don't know where they came up with these things from. So, I look at this and said, and I've argued this thing from day one, that this test just doesn't make sense. It just doesn't make sense. So, so that's kind of where my position is on this.
All right, thank you very much. Let me start with a quick question, Mr. Moser. Looking at your Exhibit 1, I wanted to ask about the part that you had labeled miscategorized.
Yeah, that was their way of saying it was miscategorized in cost of goods sold, and it shouldn't have been in cost of goods sold. That's what they went back and did.
So
it's not it doesn't have anything to do with whether it's taxable or non-taxable.
that was what I was trying to figure out.
Yeah. No, this is part of the problem of dealing with people who really aren't accountants. They're trying to do accounting work. But but that's what she was, because what I asked her to do was, because this test is based on cost of goods sold, I asked her to go back into her general ledger and adjust the items that were not in that were in the cost of goods sold in the general ledger, but should not have been in cost of goods sold. And so that's what she put. That's what her miscategorization is. It's for the items that should not be part of cost of goods sold. And the first page of that listing is all the items that should be in cost of goods sold.
So what is your argument as to how, if we agreed that these items were miscategorized, how would that affect the taxable measure?
Well, no, that has nothing to do. That's just that has nothing to do with whether the tax is right or wrong. I mean, what it will do is this cost accountability test it will get adjusted for it because the cost of goods sold is wrong. But but that miscategorization, that was really for my purpose and not for. I probably should have just taken it out when I sent over the thing. It has nothing to do with whether something is taxable or non-taxable.
Okay, thank you. Then I will turn to my co-panelists and ask if they have any questions for appellant. Judge Geary?
I'd like to reserve my questions until after the department gives its presentation, please.
Okay, thank you. And Judge Wong, do you have any questions at this time?
I guess I had one question. Excuse me. You had mentioned that you had kept the invoices in your office, but then you asked the auditor whether you could return them to the client. Is that correct?
Yes, when the original audit happened, the client had brought over all, because we were doing the audit in our office, so the client had brought over the boxes of all his purchase invoices. And so, yeah, we had like 6 or 8 boxes in the office, and that's what the auditor went through those invoices to, I assume, to come up with her listing. But she was there for weeks.
And then you returned the boxes to the client?
Yeah, I asked her before I returned them, because we had them in our office, and we didn't really have a big office. We didn't have a lot of room for them. But I asked her before I returned them, do you have any questions? Is it okay for me to return them? She never, I never got any feedback from her. I never got any questions from her on anything that she did. And I found that really unusual. I'm an auditor. Okay, we do a lot of auditing, and if I find a problem, I go to the client right away and ask them, because how does an outside person really know anything that, unless they ask the people who deal with this all the time?
Do you know what the client did with the boxes of invoices after you returned them to your client? If you know.
Well, no, I just assume he keep some file somewhere.
Okay.
I mean, they were in such a way that I doubted like he would have taken the stuff out and redid, because they were labeled. It was all labeled.
All right.
On the outside, yeah.
Thank you. No further questions.
Okay, thank you. Now we will switch to allow CDTFA's presentation. CDTFA, you have up to 30 minutes.
Thank you, Judge. Pellant is a California corporation that operates a construction business since May 1st, 2009 in Sherman Oaks, California. As a construction contractor, Pellant furnishes and installs swimming pools and spas and related fixtures and equipment. Pellant also provides maintenance and repair services. In late 2010, Pellant opened a retail store at In late 2010, Pellant opened a retail store at the business location to sell pool and spa-related supplies and merchandise. During the audit period, Pellant purchased merchandise in three ways. Some purchases were with sales tax paid to the vendors. Some purchases from out-of-state vendors were made without sales or use tax paid. And some purchases from California vendors were sales for resale using a resale certificate. The construction contracts for furnishing and installing swimming pools and spas and related fixtures and equipment were either on a lump sum basis on a lump sum basis or on time and material plus sales tax basis. At the retail store, Pellant recorded sales on its point of sale system. The department audited Pellant's business for the period of April 1st, 2010 through March 31st, 2013. During the audit period, Pellant reported around $2.1 million as total sales and claimed around $18,000 as non-taxable labor and around $1.9 million as other deductions, resulting in reported taxable sale of around $257,000. It's all right. And that will be on your Exhibit A, pages 18 and 19. Pellant did not report any purchases that were subject to use tax for the audit period. During the audit, Pellant failed to provide complete purchase and sales records, such as job contracts, cost files for individual job performed, sales invoices, POS sales download with all related folders from his POS system, sales receipts, and credit card sales receipt to support its reported sales for the audit period. As a result, Pellant could not provide adequate support to demonstrate how it reported its sales on its sales and use tax returns, specifically what sources it relied upon. The department completed three verification methods to evaluate the reasonableness of Pellant's reported total sales, taxable sales, and purchases subject to use tax. The department was unable to verify Pellant's taxable sales and purchases subject to use tax using a direct audit approach. Ultimately, the department used the cost accountability test to determine the unreported taxable measure that was subject to use tax for the audit period. First, the department compared the reported taxable sales for years 2010 and 2011 with the gross receipts reflected on Pellant's corresponding federal income tax returns and calculated a taxable sales percentage less than 1% and that will be on your Exhibit A, page 50. However, based on the analysis of audited taxable sales and purchases, the appellant overall audited taxable sales and purchase percentage are a little over 3%, and that will be on your Exhibit A, page 50. Second, appellant did not report any purchases subject to use tax for the audit period, and that will be on your Exhibit A, page 18. However, based on appellant's purchase records, appellant's ex-tax materials, fixtures, and equipment purchases were more than $900,000 for the audit period, and that will be on your Exhibit D, pages 207 through 228. Third, the department reviewed appellant's federal income tax return for years 2010 and 2011 and noted net loss of around $4,000 in year 2010 and low net income of around $4,100 in year 2011, and that will be on your Exhibit A, page 50. The department compared the gross receipt appellant reported on its federal income tax returns in years 2010 and 2011 with appellant's reported total sale of around $75,000 for the same period and calculated an overall difference of around $7.7 million, and that will be on your Exhibit A, page 50. The department also compared the reported total sale of around $75,000 to the purchases of around $3.4 million reflected on appellant's available federal income tax returns and calculated an overall negative reported book markup of around 98%, and that will be on your Exhibit A, page 52. The total purchases of $3.4 million is also more than 45 times larger than the reported total sale of around $75,000. Appellant explained that for the first 10 quarters, its reported total sales are net of contract sales, but did not provide the source of the reported amounts. For the last 2 quarters, appellant reported total sales that included contract sale of around $1.9 million that were claimed as deductions for non-taxable labor and contract sales, and that will be on your Exhibit A, pages 18 and 19. In general, appellant is liable for taxes on materials used in lump sum construction contracts. If appellant did not pay sales tax on the purchase of the material, then appellant would owe use tax on those items when it consumed them and used them to fulfill the construction contracts. Similarly, appellant is generally liable for tax on fixtures and equipment it used in lump sum contracts. If appellant did not pay sales tax on the purchases of those items, then appellant would owe use tax on those items when it used them in fulfilling the construction contracts. Therefore, in regard to construction contracts, the department considered appellant to be the consumer of material installed in lump sum contracts. The retail of fixtures installed in lump sum contracts and the retail of equipment installed in lump sum contracts. The department noted that the appellant did not maintain cost files for each individual job performed. During the audit period, appellant purchases include some purchases with tax reimbursement paid to the vendor, and others purchased without tax. And that will be on your Exhibit D, pages 157 through 228. As such, materials and suppliers that were purchased without payment of sales tax reimbursement to the vendors and consumed in fulfilling contracts on lump sum basis are subject to use tax. As stated earlier, Palant has not reported any material purchases subject to use tax on its sales and use tax return for the audit period, and that will be on your Exhibit A, page 18. The department therefore performed a cost accountability test to identify any unreported use tax liability, and that will be on your Exhibit A, pages 47 through 49. Cost accountability test is an audit procedure performed on a taxable measure basis in which all material costs are accounted for. The department performed this test to determine whether the Palant has reported the correct measure of tax on materials, fixtures and equipment installed in construction contracts. The department examined Palant's purchase journals and available purchase invoices for the period April 1st, 2010 through December 31st, 2012. And that will be on your Exhibit D, pages 157 through 228. Based on the available purchase information, the department calculated purchases of materials, fixtures and equipment of around $2 million. That was comprised of $1.1 million in purchases with tax paid to the vendors and around $909,000 in purchases without payment of tax. And that will be on your Exhibit D, pages 157 through 228. Based on the available beginning and ending inventory amounts, the department calculated an adjusted total purchase cost of around $1.8 million, and that will be on your Exhibit A, pages 47 through 49. The department reduced this amount by $1.1 million for tax paid purchases to calculate around $658,000 for purchases without tax paid to the vendors and consumed in fulfilling lump sum contracts for the period April 1st, 2010 through December 31st, 2012. And that will be on your Exhibit A, pages 47 through 49. The department determined that all retail sales relating to time and material contracts and all in-store retail sales were from tax-paid inventory of materials, fixtures and equipment, and therefore sales tax was due only on the gross profit on retail sales, and that will be on your Exhibit C, pages 106 through 120. From the sales journals, the department calculated the retail sale of materials, fixtures and equipment under time and material plus tax contracts of around $124,000 and retail store sale of around $189,000 with a total of around $313,000 in retail sales for the period April 1st, 2010 through December 31st, 2012. And that will be on your Exhibit C, page 106. The department performed a shelf test of over-the-counter sales by comparing the selling prices on the sales report for the period June 15, 2013 through June 30th, 2013. the shelf test resulted in an overall markup of around 30%. And that will be on your Exhibit C, pages 121 through 126. The department then used the total retail sale of materials, fixtures and equipment from Pelham's time and material plus sales tax contracts and from Pelham's retail store sales to determine the cost of purchases of around $240,000 and gross profit of around $73,000 for the period April 1st, 2010 through December 31st, 2012. And that will be on your Exhibit A, page 48. The department used a calculated ex-tax purchases of around $658,000 and gross profit of around $73,000 to calculate Pelham's audited taxable measure of around $731,000 for the same period. And that will be on your Exhibit A, page 48. Audited taxable measure was compared with the reported taxable sale of around $216,000 to calculate the unreported taxable items of around $515,000 for the period April 1st, 2010 through December 31st, 2012. And that will be on your Exhibit A, page 48. Unreported taxable items were compared with the reported taxable sales to calculate the percentage of error of around 239% for the same period. And that will be on your Exhibit A, page 48. The department then applied the percentage of error of around 239% to the reported taxable sale of around $257,000 to determine the unreported taxable item of around $614,000 for the audit period. And that will be on your Exhibit A, page 46. Had the department used the audited ex-tax purchases of materials, fixtures, equipment of around $909,000 without considering the total purchases of materials, fixtures and equipment of around $2 million to determine unreported purchases subject to use tax. This would increase the unreported taxable purchases subject to use tax by around $164,000 from around $614,000 to $778,000. And that will be on your Exhibit A, page 46, and Exhibit D, page 157. The audit calculation of ex-tax purchases of materials, fixtures, and equipment based on the cost accountability test was reasonable and was in Pelham's favor, since it was the lowest of the differences determined. Ultimately, the department used an audit method which yield the lowest deficiency measure to give a benefit to the Pelham. As mentioned earlier, Pelham did not provide documents that were requested, so the department could directly calculate the unreported ex-tax purchases subject to use tax. Pelham did not provide cost files for each individual job performed. Pelham did not report any purchases subject to use tax, and the department was unable to determine the unreported purchases subject to use tax using a direct audit method. Therefore, cost accountability test was used to determine unreported use tax. Accordingly, the department determined the unreported tax based upon the best available information. The evidence shows that the audit produced fair and reasonable results. Pelham contends that the audit results are not accurate and it should be adjusted. Pelham also contends that it completed 100% review of its purchase information and request the department to accept Pelland's findings. As support, Pelland provided the same general ledger information that was previously provided during the audit fieldwork, and that will be on your Exhibit 1 and Exhibit D, pages 157 through 206. Yesterday, Pelland provided 13 purchase invoices and a transaction detail for some of his vendors, and that will be on your Exhibit 2. This information was available for the audit staff during the fieldwork. This purchase information also excluded from total purchases of materials, fixtures, and equipment of $2 million and audited ex-tax purchases of materials, fixtures, and equipment of around $909,000, and that will be on your Exhibit D, pages 158 through 228. As stated earlier, had the department used the audited ex-tax purchases of materials, fixtures, and equipment of around $909,000 without considering the total purchases of materials, fixtures, and equipment of around $2 million to determine unreported purchases subject to use tax, this would increase the unreported purchases subject to use tax by around $164,000, and that will be on your Exhibit A, page 46, and Exhibit D, page 157. Therefore, the department rejects Pelland's arguments, and the department finds that the amount assessed in this audit is not only reasonable but benefit the Pelland. Before the pre-hearing conference, Pelland also contended that there are some calculation errors in the cost accountability test, that the adjusted error rate should be 212%, and that Pelland is entitled to relief of interest due to unreasonable delay in processing of this audit, and that will be on your Exhibit K. Since Pelland has not stated any specific errors in the cost accountability test, the department rejected this contention. The department was not able to verify the Pelland's proposed error rate of 212%, and that will be on your Exhibit I, page 321. Therefore, the department rejected the second contention. Pelland requests relief of interest due to unreasonable delays in processing of this audit. The department performed an analysis of the case and the specific time spent during the audit, appeals, and settlement process, and that will be on your Exhibit J. Pursuant to the review, the department recommends relief of interest for the periods of December 1st, 2013 through December 31st, 2013, May 1st, 2014 through June 30th, 2014, August 1st, 2015 through October 31st, 2015, August 1st, 2017 through September 30th, 2017, June 1st, 2019 through August 31st, 2019, and October 1st, 2019 through January 31st, 2020 for a total of 15 months. The department requests a request for relief of interest form signed under penalty of perjury for this recommendation to take effect. Pelland has not provided any reasonable documentation or evidence to support any additional adjustment to the audit finding. Therefore, for all of these reasons, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you. And now we may have questions from the panel. Judge Geary, would you like to begin with any questions?
Sure. For the department first. Did the department assume that all retail sales, either in conjunction with time and material contracts or retail store sales, were from tax-paid inventory?
Yes.
Why?
The even the based on the information we recover. I mean, we review, like, based on the information we had, the appellant did not maintain any cost files, and the only information the department had is retail sales, and the department was unable to identify whether the retail sales came from tax-paid purchases or ex-tax purchases, and we use the actual retail sales and actual material and materials, fixtures and equipment used in lump sum contracts, and identify the total sales, and the most effective way to identify the unreported taxable purchases by using the audit that we use, and like also during the audit period we identify the actual ex-tax purchases, $909,000. So if we use the actual ex-tax purchases, the number should be 164,000 more.
The number.
If we use the actual ex-tax purchases of 909,000 and adjusted for opening and ending inventory and compare that to the reported sales, then the number is more than what we have for this audit, even if we didn't take 73,000 gross profit into consideration. So the way we did the cost accountability, our objective to identify the ex-tax purchases, but actually we have the actual ex-tax purchases on actual basis in Exhibit D. Page 207 through 228. By using the cost accountability test, actually we gave a huge benefit for the taxpayer by not picking $664,000. So it is our position, the way we approach the audit, by assuming all the retail sales came from tax-paid purchases is reasonable.
Let me just. So, by assuming that all retail sales were sales of tax-paid purchases, it actually benefited the taxpayer.
Yes.
Okay. Same regarding a similar assumption made with respect to the ending inventory, correct?
Yes, because we can identify based on the accountability test, we already have the opening inventory, and we have the 2 million purchases, and we have ending inventory 200 something. So if we compute a percentage, like opening inventory divided by the purchases to compute the opening inventory percentage, and if we do the same thing to compute the ending inventory percentage and apply those two percentages to 909,000, then we have opening tax ex-tax inventory and also ending ex-tax inventory. If we apply those adjusted numbers, then the unreported taxable should be more than 164,000.
Is it your understanding, Department, that the items included in purchases did not include charges for services?
That's right, and the easiest way to verify it, we already have the federal income tax return purchases. If you go to page 50 of Exhibit A, 2010, the purchases for the whole 12 months purchases is 1.9 million. And for 2011 is 1.4 million. And if you compare that to the Schedule 12C, that is Exhibit D, page 157, the total purchases we use for the material accountability test is 585,000 versus 1.4 million. And in the audit working papers, it specifically says we make adjustment for subcontracts, services, and also the appellant provided the detailed listing yesterday, and before the hearing we reviewed that information. There are about little over 10 vendors. Those vendors were not listed in our total purchases, listed in Schedule C of that is Exhibit D, pages 158 through 206.
You're referring to the exhibits that were not admitted today?
Yeah, like I was referring to as Exhibit 2, and I can give you exactly.
That won't be necessary.
Okay.
Some questions for the appellant. Mr. Mosier, does your client contend that the items identified as purchases of tangible personal property made without the payment of tax to the vendor are not accurate?
The listing of the ex-tax purchases?
Yes, which I think is
Yeah,
the
it's-
original
we-
Schedule C, 12C.
We don't think that's accurate.
And have you or has your client submitted to the department, either during the audit or in the course of this appeal, an invoice that shows that any given entry on that schedule does not accurately state an amount paid by your client for tangible personal property?
Yes. Originally, they had every invoice. So if they had a question, if they came to an invoice and they said, no tax was paid, but we think tax should have been paid, they had the opportunity. I was 50 feet away from this auditor. She could have came to me and said, hey, I have this invoice. I think tax should have been paid, and it shows that it's not paid. So why wasn't it paid? We could have then gone back to the client and figured out why no tax was paid. And we could have then determined whether she's right, we're right. But that was never done. And that's why I had the client, this one invoice that I submitted today shows that. It shows that there should not have been tax on here. It wasn't tax on here. It's on their ex-tax listing. So we've talked about this for years. in this whole thing. And why they didn't do this, I cannot figure out. And this goes a little bit to the rebuttal, but they're sitting there saying that we didn't provide all the documentation. We provided everything that they asked for. Now, I will say that in a perfect world, there are some things that they probably asked for that just weren't available. But everything that we could have provided, we provided, and we provided every invoice. I mean, what's more direct than looking at the invoices of the purchases and determining whether there should be tax or no tax?
Let me interrupt you for a second.
Sure.
And try to focus this discussion. You have said in your argument, and you've said in response to my question, that you or your client or both think it was inappropriate for the auditor to look at an invoice, observe that it involved the purchase of tangible personal property, and to observe that it showed no payment of tax by your client. Why do you think the auditor would have to ask you about it if the information is right there in front of the auditor?
Because it's not that simple. They were purchasing items properly without tax, and they were purchasing items with tax. They had a retail store. The items that they purchased with the retail store did not have to have tax on it because they're charging tax to the ultimate person they're selling to. So
I understand that. But why do you think? I don't think that the department disputes that it was entirely within your client's rights to pay tax on some items and not pay tax on other items. But are you suggesting that the payment of tax by your client determines whether or not your client owes tax on those items? Let me ask you this. If your client buys a pool filter and pays tax on it, and then sells that pool filter at a profit to a customer, do you believe your client owes tax on any of the amount your client receives in payment for that pool filter?
well, I think the profit portion may have a tax.
And don't you think
but-
that's what the department did with respect to retail sales of items that were purchased by your client, tax paid?
No.
All right.
No, I don't. Not from the listing that's there.
Does the evidence that you've submitted, referring to that evidence, and I'm not talking about spreadsheets, I'm talking about, because we don't know the source of information on some spreadsheets, but can you point to any specific entry on the department's schedule of purchases that is wrong because the department included in the taxable measure, either because it's use tax owed on the purchase price? You do agree, by the way, that your client would owe use tax on tangible personal property purchased and consumed by your client, correct? Okay. And
Yes.
you also agree that your client owed sales tax on the profit it made from TPP purchase, tangible personal property purchase tax paid, because you just said you agreed with that.
Right.
Can you point to any entry on the department's schedule of purchases, either tax paid purchases or ex-tax purchases, where the department incorrectly included either the purchase price or the profit in the taxable measure, and then point us to an invoice that shows the department was wrong?
Yeah, I forget the page numbers for the X-Tax listing. Do you guys know the X-Tax listing page number?
The X-Tax purchases is in Schedule 12D, which is part of Exhibit D, and it's pages 207 through 228.
And I have that schedule in front of me. And if you can, if there is an entry on that schedule that you think your evidence establishes an error,
Yeah, if you look at this invoice dated 8/9.
a line number would probably help
Okay, yeah,
me
let me
better.
find, let me find the listing. Wait, 207?
I'm sorry, I didn't hear that.
It's page 207?
Okay, and give me a line number.
I believe you say 207 or 227.
Well, let me,
It's page 207 through page 228.
okay, 272. Let me find this one.
I should clarify, that's the bait stamp page number.
Yeah, at the bottom, yeah. Oh, no, I take this. Oh, yeah, this. Yeah, I got this from this page 112, this retail and service invoices, which,
Let me just interrupt you, Mr. Mosier. When you say page 112, is it
the
on-
stamp number.
Okay, give me a minute to get there, okay?
Okay.
And you mean 112 in CDTFA's exhibits?
Yes.
Okay.
It says retail and service invoices.
Okay,
To
I'm on
2012.
112. The first line number on that page is 109. Is that the
Right.
right one?
Yeah, so if you look at 115,
115, $37,330.
which shows that it's put into the X-Tax listing, but it's not an X-Tax.
And you know this because what?
I have the invoice.
Is that
It
the
should be, it should be X-Tax, but it was added back in as taxable.
It sounds, are you, when you say, but it's taxable, you mean?
It's
that
not
you're-
taxable, but it was added back in on their calculation that it should have been taxable.
I'm confused, and let me ask you for some clarification. Is it your contention that line item 115, an invoice for $37,330, appears on the schedule for retail and service invoices 2012, and is it your contention that $37,330 is included in the schedule of TPP purchases that are subject to tax either on cost or profit?
Yes.
All right, let me interrupt my questions to you and go to Mr. Samar Wickrama and ask you, sir, is that amount included in the department's measure of tax?
No, because that's the sale invoice, not the purchases. That listed the sales invoices for that particular year. And the purpose of that schedule is to identify what's the retail sales and the material equipment and fixtures used in lump sum contracts. So the department did a similar test for all 3 years to identify retail sales of material, fixtures, and equipment. And this is sale invoices.
Judge Gary, I'd just like to add something real quick, is that I think where the appellant's representative is getting confused is our audit is conducted, basically the measure is solely derived from purchase invoices, and he has always provided sales invoices saying they're not subject to tax. The invoice that he provided that he points out, we agree that it's not subject to tax, but it has no bearing on the adjustment to the purchases of or the ex-tax purchases on Schedule 12D.
Because it's not included in those purchases.
Well, it's a sale and not a purchase.
Right.
Correct.
Okay. Do you understand that, Mr. Mosier?
Well, I understand what you're saying, but I don't necessarily agree. But
Okay.
you can go on.
Is there any other particular amount included on the department's schedules of ex-tax purchases or tax included purchases that you think should not have been included in the taxable measure?
I don't have any detail on it now.
Thank you. Those are all the questions I have.
Thank you very much. And Judge Wong, do you have any questions?
I have no questions. Thank you.
Okay. Give me just a moment. Right. I think that I will say that we can move on to appellant's rebuttal. If you are ready, Mr. Moser, if you need a minute, that's fine.
No, I'm fine. That's fine. I can
Okay.
go.
You can go ahead with your rebuttal, and yeah, thank you.
So part of what the department said was we refuse to show some records, which was not true. We provided all the records that they asked for that were available. Now, I will admit that there were some records that they asked for that were not available, partly due to timing, partly due to my client not fully understanding his record retention. And so there were some records that we couldn't provide. But everything they asked for, there was nothing that they asked for that we couldn't provide a sampling of. They asked for point of sales not invoices, but records to show the sales for the whole 3-year period. The client had changed their point of sales equipment, and so all the records were not available, but we were able to provide a test for the period, which they did. So their whole contention is that they had to use this cost accountability test because they couldn't get records. I find it hard to understand, if you have every single invoice in your possession, how you can't use a direct auditing method. and why you have to then go to some other record, some other way of testing. I don't understand that, and it's something I've never understood for the last 10 years. They talked about time and material contracts. I'm not really sure there were any time and material contracts. I think they're really talking about the route sales. They talked about that we couldn't show them how the sales tax reports were calculated. We did go through the way it was calculated, and we gave the auditors at some time the backup that the client used. Now, I will admit that the client did not prepare the returns properly because they didn't understand, and I find this with a lot of clients, they don't understand that they're supposed to report 100% of their sales and then take a deduction for the non-taxable sales. So, yes, they only reported the taxable sales on their sales tax return probably up to the time of the audit. Maybe after that, then we straightened them out on that. But we did give them the detail. The client did have records of how they made the calculation, and we did send them that information. Let's see. Well, I mean, yeah. Some of the stuff that he was talking about, I couldn't really follow because I couldn't get to the pages fast enough. But my main contention is that this cost accountability test I don't think is accurate because I don't know that the books and records are as accurate as they need to be for that test in terms of what's cost of goods sold, what isn't, what's purchases, where they are on the general ledger and stuff. But if you have every invoice, I just don't understand how you don't use that and say, okay, I looked at every invoice and let's determine whether tax should have been paid on it or not. I don't know. I mean, I don't know. I do a lot of auditing, and that's the way I do my auditing. If I come up to a question, I go to the client and ask them, hey, what happened? I can't make a determination and put it in a financial statement and say, hey, this client did all these things wrong because that's my determination. I have to ask them, and that's really what should have happened here. They had the records. You know, to say they didn't have the records is completely false because they had all the purchase invoices. I mean, you're telling me that someone sat in my office for 3 weeks and wasn't looking at anything? So that's what I don't understand. And I'm not trying to say that the numbers should be zero. Okay, I just want I'll admit that there were errors in here. You know, the client did try and keep a distinction between what they were purchasing with tax for the store and what they were purchasing for their construction business. But, you know, you call up a vendor and you say, hey, send me whatever. You know, sometimes the vendor makes a mistake. Sometimes you make the mistake, whatever happens. So I'm not trying to say that everything is perfect here, but I just don't think that this number is accurate.
Okay, thank you very much. And I did allow an extra few minutes if CDTFA had any final response. In addition to what we've already heard from you, you do not need to repeat anything.
We have nothing to add.
Okay, thank you. All right, then I can say that this concludes the hearing. The record is closed and the case is submitted except for the appellant's submission of the written request for relief of interest. Mr. Moser, it can be signed by you or it can be signed by your client, but as I said, it does have to be under penalty of perjury, and you indicated you would submit it to OTA with a copy to CDTFA 1 week from today. And I don't know if we need any time for response from CDTFA.
We've already gone over the months that we're willing to concede.
Right.
So I don't think, I don't see a need for a period to respond.
Okay, thank you. All right, then I will say, once we Right. I guess the question is for the periods that aren't conceded, whether CDTFA would want to respond on those.
The appellant's representative made no argument today about any of the other periods. I would consider this to be the forum to provide that argument. I'm not sure the need for it after the fact. We've already provided all of our analysis and the periods in which we felt there was an unreasonable delay, and otherwise the items were being worked. So.
Mr. Moser, you understand that the question is for the time period where you're arguing there wasn't relief of interest and CDTFA hasn't conceded it. If you didn't raise it during your argument today, and so the question is how, whether CDTFA would have, whether that period is still at issue. Those periods are still at issue, and whether CDTFA, if you're not going to raise it now, how would they have an opportunity to respond?
I did raise it, and you said that I needed to put it in writing.
I think we...
You asked me what periods, and I told you, and then you said, well, some of that's outside of your purview.
Right. The period for after it's left CDTFA. The question is, hold on, let me look at the time. So the time period that is in question that we're talking about here is March, April, and March through May of 2019, and then September 2019, and then February 2020 through whenever CDTFA's final options letter was issued. And if we look at
is that the September period? September 2020?
Well, I think CDTFA's options letter was issued. Hold on. The option letter was issued August 4th, 2020. So that would be the end date, essentially.
Oh, August. Okay.
Now, CDTFA is conceded, as I said, periods within that.
Right, June through August and October through January 2020? October 2019.
Yeah, is your microphone on, Mr. Moser?
Yeah.
Okay.
I'm sorry.
Sorry.
So, yeah, I think it's the June 2019 to August 2019, and October 2019 to January 2020.
Right. So those are the periods that's conceded. CDTFA
Right.
is saying they don't need to respond to that.
Right.
They've already conceded it.
Mhm.
The question is, those other periods that we're talking about, do you have any argument or evidence that you're pointing to that beyond what you're going to put in, not beyond, but what they're saying is there, you didn't argue anything about those periods during your presentation.
Well, I didn't say anything because you said that I needed to put it in
We
writing.
do need it in writing.
So I didn't really say much. I mean, this thing was delayed from 2013 to 2018. So I'm not really clear as to what periods I'm allowed to get the relief of interest, and well, my client is allowed to get the relief, But I mean,
Right. Well, I will.
everything was delayed. I mean, there was no period from 2013 to 2018. This whole thing was just delayed.
Right. And I will point you, I will say, I will point you to CDTFA's Exhibit F, where they have that little chart that.
No,
their
I have.
position.
I
Okay.
have that.
Okay.
I wasn't.
All right.
real
What I'm
clear
going to
of the
say
coloring.
is, you're going to submit your request for relief of interest by a week from today.
The 22nd.
Right.
Yeah.
CDTFA, I will leave the record open for, if you have any response, you will set a deadline for which you can respond. And if you think that there's no need to respond, then please let us know, and then we'll close the record.
Okay.
Okay, so what, do you want 2 weeks from the submission of the request?
Yeah, 2 weeks is fine.
Okay.
Thank you.
All right, so I'm going to leave the record open, as I said, 1 week from today for appellant submission. CDTFA will have 2 weeks to respond, and then the record will be closed. And as I believe I indicated previously, after that, once the record is closed, the judges will meet and decide the case based on the evidence, arguments, and applicable law, and we will mail both parties our written decision no later than 100 days from today. So, sorry, from the day, right, from the date of closure, sorry.
So that's like 3
100
weeks.
days from the date the record closes.
So that's about 3 weeks from today.
Yeah, that'd be
depending
about 3
upon-
weeks from today.
Yeah. Okay.
Okay. Sorry, that's my my default language. So I believe that wraps everything up, and so the hearing is now adjourned. Thank you very much, everyone, for your participation. Okay. We are off the record, and we have concluded hearings for today. Hearings will resume tomorrow morning.